Expert financial information, none of the awkward. Just Ask is Best Eggs video series where we ask experts the most important questions you want to know or might be afraid to just ask. It's my pleasure to introduce to you our host, Sabrina DeVito.
Welcome to episode 6 of our video series called Just Ask. I am delighted to have Rod Griffin today with us, who is the Senior Director of Consumer Education and Advocacy at the credit reporting agency Experian. And he's here today as our guest to talk with us about credit scores and specifically how you might protect and improve your credit score. Hey, Rod, thanks so much for joining us today.
Hi, Sabrina. Thanks for having me. Glad to be here.
Awesome. Well, Rod, could we get started by having you perhaps just introduce yourself to our listeners and tell us a little bit about Experian?
Sure. Yes. My role at Experian is actually being responsible for consumer education and advocacy. So every day I have what I tell people is the best job in the company. I actually told my CEO that. I'm not sure you should tell your CEO that, but I did, honestly, because I get to help people understand what we do and how we can help them be more financially successful and how to use a credit report and understand credit scores, because they can be really, really confusing and they shouldn't be. So I spend my days doing blogs and interviews and talking to people about who Experian is and what we do. And for those who don't know, Experian is one of what they often refer to as the big 3 credit reporting companies. But we are actually an information services company, the largest in the world. And with our credit reporting systems, the whole objective is to help people be able to connect with lenders and other businesses by sharing information that will then help them get better terms and better rates. And so managing that credit report, managing those credit scores is really important and can empower people to make good decisions and actually have more success financially. And that's what we really want to do.
Awesome. And you said you've been with Experian for
23 years.
23 years. That's awesome.
Yeah. I did not have any of this gray stuff that's on my head when I started. And I had more of the brown too, I think. So it's, time flies.
That's great. And you're actually based out of Texas right now.
Right. Yeah, I'm actually in the Dallas area. We have our National Consumer Assistance Center, or what we call MCE, and our data centers are in Allen and McKinney, Texas. So I'm in the suburbs of Dallas.
Okay, great. Well, let's just jump in. So let's start with the basics. Like, we hear about credit score and, people obviously have access to their credit score now more than ever. Help us understand, like, what is a credit score and how is that different or similar to FICO score or Vantage score? Like, you hear all these different scores, and let's just give them kind of the skinny of how that all works.
Sure. And credit scores are a tool to analyze the information in a credit report. And so the way I kind of describe it is, if you're in school, which parents are wishing their kids were, I think, these days, you need to get them out of the house. But, all the homeschool teachers and my family included. But if you're in school and you do a school paper, that's like the credit report. The paper then goes to the teacher, who's kind of like the lender, and then the teacher grades that paper. The grade is kind of like the credit score. The credit score represents the information in the credit report. So it's important to distinguish between the two, simply because you manage your credit report to make sure that you improve your credit scores. And so credit scores represent the information in the report. When we think about FICO or Vantage score, that's kind of like saying Ford and Chevrolet in the car world. Okay. They are companies that create credit scores. So Experian does credit reports, FICO does credit scores. So they create the algorithms. Vantage Score is a competitor. They have their own kind of algorithms, models, formulas, whatever you want to call them, to calculate the scores. and lenders choose which ones they want to use.
Okay. So that all makes sense to me. So is it important for someone then to monitor their credit report as much as their credit score, or, how would they want to go about that?
Yeah, a bit of both.
Okay.
When you get a credit score, and you can get them from lots of places. You can get the Experian app. You can enroll in monitoring services. Your credit card company might provide scores. So the score will give you a sense of where you stand in terms of risk when you get a score from a lender. And they may be different scores. And always tell people, when you get a number, if you go to your lender, they will probably see a different number because they'll use a different score, or it's the one you received is older, and you go a month later and the score will change because things change all the time.
Okay.
But it's good to know where your score is because it gives you a sense of where you stand and whether you need to improve or just keep doing the things you're doing. On the other hand, it's really important to know what's in your credit report because that's the information that is driving that number. So if you get your free credit report, you can look at it, know exactly what's in that report, know exactly what lenders are looking at when you apply, for example, and it gives you the information you need to take action and know exactly what's there. So if you're monitoring your credit report, you will see if there are late payments. You might see if there's fraud information potentially that doesn't belong to you. Things like that, you want to make sure that you're staying on top of.
And two questions. One is, how often are credit scores and credit reports updated? It sounds like it's continuously, but are the scores refreshed like continuously, or is that done at some frequency?
Yeah, and the credit reports
Yes.
are updated. Your accounts are typically updated once a month.
Okay.
Doesn't mean they're all updated at the same time. So if
see.
you have 6 different accounts, they might be updated at 6 different times during the month.
Okay.
So they're your credit report's getting updated continuously. And there may be information that ages out and falls off. You might apply for new credit, so there could be a new inquiry, things like that. So your credit report can update all the time.
Okay.
Credit scores aren't updated in that way. A new credit score is calculated each time your credit report's accessed. So the credit score itself is not part of the credit report. It's a separate process. So if a lender comes and says, I want Rod's credit report, Experian will pull that credit report together and send it to the lender. As part of that process, we can route that report through a credit score if they ask us to. The report might go to the lender and then they would calculate a score. It could go, particularly mortgage lending, for example, to a third party who pulls all the reports together and then they score them. But the score just represents the information in the report at that moment in time. So if you get a new report 10 minutes later, a new score would be calculated. So
interesting.
It's reflective of that instant.
Okay. So I can see where there would be a lot of disconnect between people receiving information and then actually accessing the information and kind of seeing a gap. And it happens, I think, if I'm listening to you, it happens for a couple of reasons. One is people use lots of different scores. A company may actually have their own score. They may use one of these other scores like Vantage or FICO as the score, and the scores are calculated at a very specific point in time, which is probably not exactly the same point in time that you'll be looking at your information. So, okay,
Exactly.
That all makes sense. How does one get their free credit report? Like if I want to monitor it, what do I do to actually get a credit report?
So there's several ways. The federal site to get your free report under the Fair and Accurate Credit Transactions Act, one of those big laws, FACT Act, is annualcreditreport.com. So go to www.annualcreditreport.com. There's no spaces.
Okay.
And you can get a free report. Under normal circumstances, you can get a free report once every 12 months. So it's not a calendar year, but if you've got a report today, you have to wait till this date next year. However, because of what we're going through with COVID-19, the credit bureaus are making credit reports available once a week. So every 7 days, you can get a new free report. And just go to annualcreditreport.com and follow the instructions. It's really easy to do.
Well, I would love to just talk a little bit about this COVID situation and bring some clarity. So, help me understand, first of all, why is the government requiring that reports be available every 7 days? And like, what are some of the actions that are being taken as a result of the pandemic? So that things that hopefully benefit our customers and other consumers.
And actually, the government didn't require that. The credit bureaus got together and said, we want to do
Oh,
this for consumers. We want to make sure people have access to their reports as often as they need them, because everything is so crazy right now,
yeah.
and things changing so rapidly. So that was a proactive step on our part to
Wow.
use that system to make reports available, and they'll be available through next spring. Right now, potentially longer, depending on what happens, of course. But
Okay.
so for at least a year, just about. Um, and so, checking it's really important with with COVID. There are things that are going on that are challenging obviously from financial perspective. People have suffered job loss, they've suffered um, furloughs, they've had income reduction, and so managing that credit report and that credit score through that process is really important. Knowing exactly what's being reported, knowing what steps you might need to take. And so having that information at your fingertips is crucial, and we want to make sure that people have it for them to make those decisions. Um, Ironically, in some ways, what we've seen over the last couple of months is people's credit scores are actually improving through COVID. And I think because people stopped spending and they started saving, and so they're paying down their credit card balances, and so we're seeing their scores actually get better because utilization is going down and their payments are continuing to be on time. So that might be a positive coming out of COVID-19 over time. We kind of have to wait and see.
Interesting. So, um, your observation as a reporting agency are that credit card balances, in fact, are going down. How do like these payment holidays and deferred payments and all of the payment flexibility that lenders have provided, I mean, does that also help to keep folks from going delinquent, or do you have a sense of how that works?
Yeah, it does. So if a person is entered into what we call a payment accommodation is the legal term, but usually it's a forbearance or a deferment with their lender. What happens is that the credit bureaus are freezing essentially that payment at the point that forbearance starts. So if your account's current when that forbearance period starts, it will stay current. And when your forbearance period ends, you pick up the payments where you left off and follow the terms. You're not going to see any negative impact. If you have, say, a 30-day late payment, so you've missed a payment in your mortgage before that forbearance starts, that mortgage payment is still going to be 30 days late.
Right.
But when the forbearance period ends, it's still going to be 30 days late. It won't get any more delinquent. So we're kind of freezing those histories at that point so that when you get through this crazy time we're in and start over again or pick up again where you left off, it's exactly what's happening. Your credit history will be where it was when this all started, and you can continue on.
Is there anything specific? So if somebody has either themselves been impacted by COVID or their life has been impacted by COVID, is there any reason that they should reach out to the credit bureaus, the reporting agencies directly, or just contact, their lenders and try to work out these programs with them?
Yeah, if one, go to your lender, of course, make sure that you're talking to them early. If you know that you may be impacted, that can help them put in place the plans that are available. And there's some really unique um, services that are being provided right now in response.
Okay.
They can report to us, for example, that an account is affected or the consumer is affected by a natural or declared disaster. There's a special statement that can be put on your credit report that can help protect credit scores and help tell lenders you're infected, not infected, affected. So you're affected by COVID-19. Hope you're not infected. So there's some things that can be done there. There are, the forbearance programs and deferment programs with special reporting processes for lenders. So it's important to talk to your lender. It's important to get your credit report. Know what's in that credit report so that you can take action if you need to. Look for signs of fraud. One of the things that's frightening, and we see this anytime we go through this sort of period where there's a crisis, predators come out of the woodwork. People are trying to take advantage of victims of COVID-19 and the stress and fear that they're under. So check your report, make sure that you're making good decisions and not being taken advantage of. We can help you address those kinds of issues if there's fraud or if there's concerns in that way. So check the report, dispute information if you believe it's inaccurate. You should always continue to work with us. That won't hurt your reports or scores at all.
Okay, great. And kind of a separate but a related question. So this situation, which is, a bit unprecedented at this point, you're kind of categorizing as almost like a national disaster. So sometimes, like when a hurricane moves into an area and an area is down for some period of time, we flag that as a natural disaster area and we give them a lot of leniency until they get back on their feet. How about in the case of just the everyday person after, pandemic, post-pandemic, or post any kind of tragedy? I lose my job, or perhaps I have a medical issue. Is there anything that I can specifically do to alert my creditors that, I'm in distress right now? Is there any steps that they should take or work directly with their lenders?
Yeah, in that case, you really need to work directly with the lender.
Okay.
They know where their customers are. And you're exactly right. When in the past, with natural disasters, they tend to be more localized.
Right.
So, as you mentioned, it's a hurricane or there are fires or things of that sort. And lenders work with the people in those areas and know exactly what zip codes they live in, what customers are affected, and they can report them to us. The disadvantage we have is we don't know in most cases where those people live particularly or if they're affected. And so lenders are really the right touch point, the right people to talk to. With COVID-19, it's national. Everybody's being impacted.
Right.
But at the same time, we're not all fortunately, not all sick. And so, there are a lot of, the majority of people, in fact, still are, able to be working, still healthy, and may not be impacted directly. So it's important to work with your lender if you are, and if your job's, been impacted, if you've been ill, to make sure that they can put steps in place that then would be reported to us. And then check your report and make sure it's being updated. And if it's not being updated, then we can help you connect and work with the lenders and make sure we get that information updated in your report.
Okay. So kind of staying on that note then, if you receive your report and there is something on the report that you do not agree with, what should be your first steps that you take to try to resolve that?
Yeah, if you find something you believe is inaccurate, you should always dispute that information. And it's really simple to do. When you have your report, there will be a website you can go to, or you can call or you can write. Actually, going on our website is safer, it's faster, it's more secure, and it's the same process. And we do provide verification along the way. So there's that so-called paper trail. You can still compile that, so you don't have to worry about that. And so I also encourage people, and most people tell us they would prefer now to dispute online because they don't have to write a letter and put it in the mail and wait a week for it to get to us and all of that. But when you get your report, there'll be a website, and just go to that website, you put in your report number, that report comes up on the screen, and with each item in the report, there's a button that says, I need to dispute this, and you click that button and follow the instructions. It's really simple. If you don't already have a current copy of your personal report, we'll give you a free one in addition to the other free reports that are available. So we'll say, we'll just ask you for some information, we provide the information, and we provide that report at free of charge. Not the annual report, doesn't affect that. So it's an additional free report. And follow those steps, really simple. The one thing I would say is if you do write, make sure that you're very clear as to what the dispute is. So
Okay.
my account was never late. This account should be reported in forbearance, for example. This account's fraudulent. Make that clear statement. I actually got a letter once. It was about 6 pages long, and they said, well, I want to, and the person, it was sad. I wanted to go home and cry afterward, because it was like everything could happen. It was a person who'd been sick, been an accident. They had a family person who passed away, a member that passed away. I mean, everything that could go wrong but they never got around to telling us what was wrong in the credit report.
Oh my.
So need to be specific, and so that we can share that information accurately with the lender.
Okay. So that assumption is I get my report, I see something that I think is inaccurate. I reach out to you at the credit reporting agency, and then you work back with the lenders to try to investigate and get it resolved. Is that accurate?
Correct.
Okay.
Yes. And so when we go back to the lender, they have an obligation under federal law, the Fair Credit Reporting Act, to review their records, and then either they verify that it's reported accurately, or they tell us that it should be updated in some way, maybe not in exactly the same way that the dispute is, or to remove it from the credit report. So
Okay.
those kind of the 3 options.
Really helpful. Thank you. So let's switch gears a little bit. Everybody wants to know, what are the things that adversely impact my credit score that I should be sensitive to? And I have a young daughter. She's in college right now, and she just, out of the blue the other day, said to me, she has her first credit card. This is a big deal for her, but she's like, I need to spend 30% of my credit line and pay it off each month. And I was like, where did that come from? And, it's like these, I don't know if, these wives' tales exist out there, but tell us, like, what are some things that will definitely cause your score to decrease? Just so I know.
Your daughter was kind of close, but kind of commingled several things incorrectly there. So it was on the right track in a way. So it's really not that much mystery for the most part with scores. You have to do 2 things.
Okay.
First and foremost, you have to pay your bills on time every single time. Late payments will wreck credit scores right away.
Okay.
And when we talk about late payments with credit reports, you won't see, it was late because the due date was yesterday.
Right.
Your credit reporting, it's 30 days late, 60 days late, 90 days late. You have to miss a full billing cycle.
Okay.
So if you don't get your payment there, right on the due date, don't panic from a credit reporting standpoint. Just get the payment there within that 30 days. It won't hurt your credit history. You still have to pay late fees and might have other things from the lender, but not from us. But you have to make those payments on time. That's going to be usually, 35 to 40% of a score is late payments.
Okay.
Your daughter was touching on something we call utilization. And utilization is simply your balances as compared to your credit limits on your credit cards.
Okay.
You do not want to have high balances on your credit cards. That will hurt your score.
Okay.
The ideal situation is to pay the balance in full each month. You do not have to carry a balance. And I've heard that myth too. I've heard periodically people will tell me, well, I was told that I should only pay 95% of my balance to help my scores. All that means is you're going to pay interest on the 5%. So somebody's making money and you don't really need to do that. It's paid in full. That 30% thing comes from 2 places. One is utilization rate accounts for somewhere between 30 and 35% of a credit score. So I think sometimes that gets confused. So that's about roughly 30% of the score. The other 30% comes from what FICO and VantageScore and others tell us is that when your utilization rate, your balance compared to your limits, your balance limit ratio reaches 30%, the risk of default increases much more rapidly. And so scores drop faster.
Okay.
So it's not a goal, it's not a target. You don't have to spend 30% and then pay it full. That's not going to help. It's just a point where it's kind of a maximum. You never want to exceed that because your scores will start to drop faster. Any balance can affect scores. It just, when you hit that 30%, they drop more rapidly because there's greater risk. So ideally pay it in full. So those are the 2 most important things. from there, everything builds on that. So how long have you had credit history? What are your mix of accounts? What have you done recently? So have you applied for new credit recently? Have you paid things off recently? Things of that sort. So inquiries are part of that. That's only about 5%, that new credit piece. So it's minimal. So if you pay bills on time, keep your balances in full, everything else kind of follows after that. So if you do those two things, you're going to have good credit scores.
Awesome. So any other tips for things that people who maybe have had problems with their credit in the past, any tips for how they can more quickly repair their credit score?
Yeah, I mean, I think you focus on those first two things. If you can reduce your credit card balances, you will see a rapid improvement. A personal example, last holiday season, I used one credit card. We traveled, visited family, and I used that one card for fuel and for hotels and for food and for all of the, and so the balance went up. My credit score dropped about 40 points, about 2 months. Didn't panic, turned around and paid it in full in January. It came right back up. So that's something that can make an immediate difference. So paying down those credit card balances can help really quickly. Catching up on late payments can help. Today with scoring systems, if you have collection accounts,
Yep.
if you could pay those collections in full, the newest scores from FICO and Vantage Score will exclude those paid collections from the calculation. So you could help your scores right away just by paying off a collection account in full. So there's some things that you can do in that regard. Otherwise, it's patience, it's time. You just have to continue to make those payments on time, and eventually that negative information, those late payments, will fall off.
Okay. Excellent. Well, I think that's very informative and helpful. If there's one piece of advice that you could leave our listeners with as it relates to the best thing maybe you can do to, let's switch it a little, maintain a good credit score, like one practice that people should get into, what would that be?
Oh, just one thing?
You gave us lots of
One or
things,
two?
but yeah, what
Yeah.
would be like just a good thing to start with in terms of managing my credit score?
Yeah. So, I mean, this is going to sound kind of funny, but get your credit report
Okay.
and get a credit score. Know what's there. I tell people, and I talk to groups and things, I'll ask them to raise their hand if they've gotten their report, and everybody's head just goes, and shake their head no. Why? Well, I'm afraid to see what's there. Well, you can't do anything about it until you have it. So don't be afraid to get the report. It probably won't be as bad as you think. Get a credit score when you do. And the one tip that I think that really is important that most people, or a lot of people, don't know about is that when you get that number, get the risk factors that go with that number. So you can know what to do. Every time a score is calculated, a series of risk factors are generated. Those risk factors tell you what from your report most affected that score. So they give you actionable information. So that's empowering. Just knowing the number is nice. It can be important when you're going to apply for credit.
Okay.
If you're working to improve your credit, knowing those risk factors lets you set a plan and give you an action that you can take, and that will do more than anything, I think, in terms of improving credit quickly.
Awesome. And so those, just to be clear, those risk factors would include things like late payments, your balances are too high, you've only had credit for a year. Like it will give you an indication of the types of inputs that actually were driving that score. Is that accurate?
Yes, and exactly and the risk, there are usually 4, sometimes 5 risk factors when you get them. And the most common are what you just mentioned, late payments or high balances, because those are the things that seem to affect people most. But with credit scores, there can be as many as 300 different factors that go into a score calculation.
Wow. By
getting the top 4 or 5, you know exactly what to work on in your report. And it could be you have too many credit cards, or you have presence of collection accounts, or it could be a wide range of different things. And that's why it's so important. When you get those factors, it tells you exactly what's affecting your score. And that's empowering because now you know what you need to work on. Sometimes they seem a little counterintuitive, but they're much better than they used to be. When I started, there were risk factors that said things like the balances on your credit cards are either too high or too low. And I went, what does that mean?
What's that
You
mean?
don't see that anymore. So that was very intelligent people trying to communicate when they weren't very good at the communication part. So it's got to be one of the other guys. And so now you will see your balances are too high, or you have too few credit cards, or you have the presence of late payments, or the presence of bankruptcy, public records, things like that. So you would know exactly what you need to work on. One other point to understand is that they always sound bad because the risk factors are describing what is negatively affecting scores.
Sure.
If you have really good scores, don't panic, because I talk to people with scores in the 800s, and the factor that they often get is the balances on your credit cards are too high. What that means is they have a $10 or $20 balance, and if they paid that $10 or $20 balance off, their score would go up a point or two. So it's relative to your situation, but that's the most important thing that's affecting them. So don't panic if you have good scores. Just know that's those factors are describing what's most important.
Well, that's great. So on that note, we will wrap up this edition of Just Ask. And Rod, I thank you so much for joining us today and the good tips and the advice. I hope that you will consider joining us again. We have talked about potentially having you back for a second round, and we would absolutely love to have you. We're going to be continuing this series in the coming weeks, and we're going to try to bring you more great experts like Rod to be able to answer your financial questions and help you get your finances back on track. If you have specific questions or topics that you would like us to cover to be able to help you specifically with your situation, we'd love to hear from you. You can reach out to us through our social media channels, which include Facebook, LinkedIn, Instagram, and Twitter. Until next time, I would like to wish you all good health, good happiness, and have an excellent week.